Let's take the discussion forward with Gautam Baid, who's joining us today from New Delhi. In fact, he's visiting India right now, otherwise based in the US. Gautam Baid has a new designation. He's an author and a dear friend and an old contributor on ET Now, but now he's got a new designation, and that is his designation of Equity Advisor, Complete Circle Stellar Wealth PMS. So there's an arrangement. Complete Circle is also market participants. You've seen their representatives on the channel, and Stellar Wealth has joined hands with them. Before we talk about markets, a quick word on this association. Gautam.
Hi Ajay, thank you for having me on the show. So currently I was the fund manager of Stellar Wealth Partners India Fund in the US, and a lot of NRIs and Indian citizens have reached out to me regarding offering a similar portfolio solution to them in India. And since I could not be a fund manager both in US and India at the same time as per SEBI regulations, so I met up with the founders of Complete Circle, Gurmeet Chadda and Kshitij Mahajan, and we really very closely aligned in terms of our investment philosophy, our focus on long-term thinking, our belief in the India story. And we wanted to offer a very high quality small cap and mid cap product to the HNI community in India through the PMS. At present, Complete Circle already was running a digital compounder strategy, which had majority in large caps, whereas my portfolio was primarily in small cap, mid cap, and special situations. So I've joined them as an equity advisor on their investment committee, and together we hope to add a lot of value to our clients over the next few decades and help them partake in the India investment opportunity.
Great. Good luck for that as well. Gautam, let's talk about the earnings season, especially the mid cap, small cap side of the market. How have you observed in terms of quality of earnings, and more than that, management outlook shared by in commentary after the numbers?
So this has been one of the most eventful earnings season in a very long time, Ajay. I think the earnings leadership for the next few years has been very clearly established in this particular earnings season. It was primarily led by various lending companies. So you look at NBFCs, affordable housing companies, microfinance companies, private sector banks. It was all across the board in terms of the lending companies. They probably had one of the best quarters in a very long time. And the current times are so good for the banking industry in India that ICICI Bank actually made a contingency provision. They actually had the buffer to provide for a rainy day in future when there may be a slowdown in the economy, and that showed very prudent and conservative accounting. So I think this is, like Uday Kotak has said, the Cinderella moment for the banking industry and for lenders in general in India. And microfinance companies in particular are showing very strong traction, and that is why you're seeing the small finance banks with a very high microfinance exposure really doing very well in the market recently. During February, we had the Adani fallout, and in March, we had further disruption from the US bank failures. But as soon as the year-end tax selling pressure got out of the way, we have seen a very strong comeback by small cap and mid caps in India in the last 45 days. So I think the key right now is to focus on pockets of strong earnings growth, and ideally look for places where you can find both valuation support and high growth, because there you get a valuation re-rating as well, and that is how you get multi-baggers in the small cap and mid cap space. Along with the lenders, capital goods had a very strong quarter, and after a very long time, FMCG companies have shown margin improvement across the board, because most of the soft commodities and hard commodities as well, they are basically right now trading at near 52-week lows. So autos and FMCG have shown very strong margin improvement. And we also have a national elections coming up next year. And historically, 6 months before and 6 months after the national elections is when autos and FMCG tend to do pretty well, because they have a very high rural India exposure. So I think this was a very eventful earnings season.
Fair point. So microfinance clearly stood out, and some of the mid and small lenders for sure, Ujjivan, Equitas, Fusion, Spandana, to name a few. Also, I'm curious to talk to you about the chemical space. You have specialty chemical, name one of them in your portfolio. Chemical space got bombed out after a very good few years. For 3-4 years, it has not moved. But now one is getting a sense that tariffs are normalizing, input cost issues are also normalizing from China, and many other demand is coming back. Why do you like, have you added any chemical name? What is your hypothesis in chemicals?
So Ajay, it is only during the difficult times for any industry that you get to know what is truly specialty chemicals and what was actually commodity chemicals in the garb of specialty chemicals. So in this particular quarter, if you look at the margin profile of two companies in particular, SRF Limited and Navin Fluorine. They are into fluorine chemistry, and their margins have actually expanded and actually held up. And this is the time when you actually are able to distinguish the leaders from the other also rans in the same sector. So you ideally want to have higher weightage towards the stronger players in the chemical industry and avoid the commodity chemicals. Is very, very important because the margin profile will give it away, because only the true specialty chemical companies will be able to maintain or enhance their margins in this kind of an environment. So full disclosure, I hold SRF and Navin Fluorine in my India fund portfolio, and we also hold it for our clients in our PMS as well.
And fine, Navin Fluorine are the areas which you are interested in with the disclosure. I also see you are interested in electronic manufacturing. Now, we saw how Keynes' numbers came out this time round. There is also talk of PLI and hardware extended beyond electronics. How are you playing this electronics manufacturing theme in your portfolios, and how structural does it appear to you?
So as per a recent CRISIL report, the electronics manufacturing sourcing industry, services industry is expected to grow at a CAGR of 30-40% over the next few years. And this is where you get true sectoral leadership in a sectoral bull market. So if you look at all the past bull markets, they were typically led by 2 or 3 sectors, and all those sectors had one thing in common: very high top line growth coupled with very strong earnings growth. So currently, I think electronics manufacturing services is one of the fastest growing industries in India, and this is where you want to position your portfolio for very high returns during the upcoming sectoral boom. So you mentioned Keynes Technology, that's already having a positive rub-off impact today on Syrma SGS Tech as well. Full disclosure again, we hold Syrma SGS in our India fund as well as in our Complete Circle Stellar Wealth PMS portfolios. And the good thing about Syrma SGS Technology was that they were one of the very few companies last year who actually used most of the IPO offerings for further capacity expansion, unlike many other companies which were coming out with a pure 100% offer for sale, in which the money only went to the selling shareholders and not plowed back into the company. So they are pretty bullish on that particular name.
Gautam, a quick word on FII flows, because you understand FII flows very well, being based out of US. You have a circle there who look at India. What do you think when you talk to people? You're just recently back after meeting so many fund managers across the world from Omaha, the Berkshire AGM Hathaway. What are you thinking after talking to them? Do you think flows will only get stronger from here? Are they excited about India? How are things there?
So I always say, don't focus on what people say, focus on their actions, and just look at what happened over the last 14 days. Earlier today, Nilesh put out a very interesting tweet on Twitter saying that for the last 14 days in a row, we have had positive FII flows. This is the longest stretch of positive FII flows over the last 3 years. So FIs are basically talking with their money. They're putting their money where their mouth is, and I think the flows give the entire story away. And as the Federal Reserve reaches the end of their interest rate tightening cycle and eventually starts cutting interest rates later on this year, as that is what the Fed futures market is saying to us, that is when you'll see a very big resumption of flows to emerging markets. And given the apathy, the complete disenchantment of FIs with China because of all the recent actions over the last few years in that country, I think India stands to gain disproportionately from the upcoming FI flows. And one very important point to remember, Ajay, in spite of $35 billion of FI selling over the last 1.5 years, the Nifty is next to all-time highs. The bank is also close to all-time highs. So just let's try to imagine what's going to happen the moment the FI flows start coming back to India. That is when they'll come back and put money in very high quality small cap, mid cap stocks and large cap stocks. That is where you want to position your portfolio and be prepared, because you'll get a very big valuation bump driven by that FI money when it eventually comes back to India.
Gautam, you are actually essentially a stock picker, alpha generator. Talk to us about what kind of earnings growth your mid-cap, small-cap portfolio is showing for the next 2-3 years. What kind of earnings CAGR has a potential to show?
So at Complete Circle's level PMS, our investment philosophy is based on 2 key pillars: variant perception and long-term structural trends. Long-term structural trends provide us with the longer-term compounding at 15-20% earnings CAGR, and they have structural growth in them. Whereas we use the variant perception framework to generate extra alpha for our clients. These are in the categories of merger arbitrage, demergers, promoter management change. You also have cases of deleveraging, operating leverage. You also have industry cycle shift, favorable regulatory changes. So these are the various tools we use to generate extra alpha for our clients. And in this particular bucket of the portfolio of variant perception, we try to look for returns of in excess of 25% if possible. So 15 to 20% return from the structural growth names and around 20-25% returns from the variant perception plays in our portfolio.
Gautam, you also like consumer discretionary. Now, discretionary space last couple of quarters have been also hit because of high inflation. In fact, we did see some categories of consumption also slow down. Margin pressure, of course, was an issue. Margin pressure started getting reversed. Do you see demand also coming back in the next couple of quarters as rates peak out or even start going down?
So I think in the luxury and premium segment of the market, that is where I don't see any demand slowdown at all. It is in the mass consumption or the lower end where we are seeing actually the most demand pressures, because that strata of society is the most affected by inflationary pressures. That is what history has taught us, and the same played out this time as well. So if you want to generate that alpha, you have to position your portfolio within the consumer discretionary. You have to look for premium brands. And this branded discretionary consumption, I believe, Ajay, is a decadal theme in the making, because today India is at $2,200 per capita GDP. And as we transition from $3.3 trillion of GDP to 5 trillion to 7 trillion and to 10 trillion and above, and as this per capita GDP keeps growing over time, the basic spending on necessary consumption, the basic consumption needs won't go up much, but the spending on branded discretionary consumption and financialization of savings, these two categories are all set to witness a very sharp upsurge over the next coming decade. So that is how we have positioned our portfolios as well.
Coming in to your fund, both the India fund, the Complete Circle Seller Wealth, and also in your overseas vehicle.
Correct.
Gautam, if you could share, is there interest in terms of new flows? How are clients talking to you? How are you going about talking to them?
I think the biggest thing which foreign investors have realized in US, especially after the big sell-off in tech over the last 2 years, is that most of them were overly exposed to single factor risk. Most of them were fully invested only in one single factor, which is technology. And as soon as the interest rate cycle reversed after a decade, technology was the hardest hit. So now many of them have realized the need for geographical diversification, for international diversification. And in my view, the two best stock markets in the world today are US and India, simply because both these economies are driven a lot by entrepreneurship, by innovation. They have very, very strong capital market regulators as well, and they have rule of law. And I think foreigners are right now very bullish on India as an upcoming destination. And as they withdraw money from the big emerging market countries like Taiwan and China, even if India is able to attract a small part of that outflow, then I think we'll have a very big surge in FI inflows in the next coming few years.
Standing, Gautam, thanks very much for joining us on ET Now. Always enjoy our conversations. With that, it's a wrap on the show. Thanks very much for watching. Goodbye.